Mr. Kotak. As I don't think our short video adequately captured the impact which you have had on the Indian banking system. Let me start by asking you, what advice would you give to the young entrepreneurs and business leaders who are in the audience, people who are aspiring to be the next Uday Kotak?
Go for it. And keep in mind that go with a positive approach. Also keep in mind for any entrepreneur, do not calculate the probability of success or failure. If you do that, you will never get into it. The probability is very low. But if you succeed, the upside is huge. And even if you don't, in today's world, the value of somebody who's had the courage and conviction to start something is very valuable for any company to consider as an outstanding resource for that company. Therefore, either ways, you will win, okay? So I really would advise that people should take their chances. This is an India which is far more confident, self-assured than the India we grew up. And that's the big difference today.
But wouldn't one say that the challenges are also more today, even though the opportunities have also multiplied?
Of course, but there are, yeah, of course. A lot of Indian businesses in the last 30 or 40 years essentially were built on arbitrage. I think the world of arbitrage is gone. We are now into a world where you really have to do defining stuff which anticipates consumer needs, customer needs, finds opportunities which on the face of it do not exist. And I compare it with my times. In our times, the differences were much more easy to observe. For example, if you had a world where banks used to take deposits at 6% and the lending rate was 17%, it was an obvious opportunity. Today's opportunities are not so easy, not so obvious. Therefore, I think it's clearly a tougher time. But the fact of the matter is that today capital is much more easily available. And today, a failure of a startup is not looked down upon. In our times, if you failed in your business, wow, it's over.
But on the flip side, right now, I mean, when you look at many startups, they expected to be rewarded even if they are not on the path to profitability.
They're expected
to be rewarded even if they are not on the path to profitability.
I think you really have to look at what is the visibility over time. And you have to look at unit economics very closely, okay? Therefore, you may not be making money because you're expanding fast, but at every stage, please look at the unit economics. I think the answer is in unit economics, at least on a marginal basis. So look at that, and not necessarily on a full cost basis, and see how you will pan out over a period of time. And as you go down that path, you'll find new variations of opportunity, and you should be capturing that along the way.
How do you approach leadership, and what qualities you think are needed in today's fast-paced business world?
Be paranoid. And I don't know whether Harsh is around. Harsh, I agreed with everything you said. Maybe it's true for foods. But I just give you one example today. You just have to look at Nike and On. A year ago, there was no question about, maybe a year and a half ago, there was no question about Nike being the defensive play in sportswear. And there you see an On coming from nowhere. And Nike has lost, what, 30, 40, 50% market share in about a year to a newcomer. So you have to be clear, irrespective of whatever field you are, however comfortable you are as a player, there is someone out there wanting to eat your lunch. And make sure that you are on top of your game. And you're also innovating, not only to defend your lunch, but to eat somebody else's dinner.
When you reflect on your journey, setting up Kotak Bank, You have navigated numerous challenges. I mean, there were, regulatory changes, industry disruptions, economic downturns, etc. When you reflect upon those, what are the key lessons that you learned, and how have they shaped your approach to business now?
I think financial services, when we started, was a hugely fun business. You know, there was a certain sense of joy. You could, build out things. There was room, there was leeway, there was ability to grow fast. We were in an evolutionary phase of regulation as well. You had new industry starting, new banking licenses which came in, asset management opened up, insurance opened up. So the regulatory system was also very different. And then as we moved forward, the regulatory system evolved on the lines of the Western world. And Western world went through a series of crises, and that's why we just saw some of it actually get effectively imported into the Indian financial system. And of course, this consumer centricity was something which was needed, and that I think is right from a regulatory point of view to get a lot more customer focused. However, I do believe that one of the things about leadership and growth in a business is also depending on the industry structure. Financial services had a very different industry structure. We were also fortunate to have a very large presence of the public sector. So that made our lives relatively easier also. So whenever you look at success, you also got to look at things which worked for you, which may not be necessarily the cards each of you may have as you go into the future. So we were lucky about that. But at the end of the day, what worked for us is a deep commitment to trust, to make sure that every stage we earn the trust of stakeholders, customers, investors. And it has to be natural. And the most powerful way of earning trust is not by what others tell about you. It's about by you looking at yourself in the mirror, because there's no better truth than you in front of your own mirror. Okay? Keep that in mind for each of the entrepreneurs, that governance and trust come not from what others say how good you are, but what you know is the truth.
So if I may ask, what has sucked the joy out of financial services? Is it excessive regulation?
No, I think, let me put it this way. It's become a game which requires more regulation, because I think we've also had bad actors. So we cannot rule out the fact that this industry continues to have bad actors. And as we speak today, we've had challenges even now. So we've had a whole series of challenges between 2011 and 2020. But in the last 3 months, we have had 3 incidents. One with a housing finance company, one with a cooperative bank, and one with a private bank. So the nature of the industry is also very susceptible. And it goes back to a very famous statement by one of the most famous robber barons in the US. He only used to rob banks. So he was asked, why do you rob only banks? So he answered, what a silly question. That's where the money is. So it is other people's money. It's not your own money. Very little of your own money. Therefore, enormous amount of responsibility. And one of the ways to succeed in financial services is also by keeping in mind that if you build a trust and ethicality and values, that actually pays you.
So as a major stakeholder in a large bank, what keeps you awake at night?
I think what keeps me awake at night is how do we ensure people's trust, investors, customers, stakeholders, how is it that the firm continues to govern itself well, follow what is right for all stakeholders, how is it that sharp practices do not evolve in any institution, and how do we keep on finding new ways of growth, because I don't think growth is a given. I think it's a challenging industry, financial sector, and you have to constantly think about it. And therefore, as a board member, my focus is much more on strategy and governance. And that is the 2 areas where I think I would be sort of very focused on.
Right. You mentioned just a little while earlier about how when you started, it was all about arbitrage, deposits at 6% and lending at 17%. Yesterday you tweeted that, deposits at, 8% and at 9% and lending at 8.5%. So what are your current thoughts on the state of the banking sector? How do you see it evolving?
See, what I'm beginning to find in the banking sector in general is much more short-termism. What the banking sector truly requires is a mindset of continuity and perpetuity. And here I think the challenge also is the leadership must have a sense of long-termism. And in many institutions, that is beginning to become a challenge. Therefore, there is an excessive focus of, for example, in banks, and I'm not naming any bank, in banks, how will my balance sheet look on 31st of March? How much lipstick should be there on that, okay? And if that is the mindset which is excessively short-term, partly driven by the marketplace as well, which I don't agree, and I really liked Harsh Mariwala's statement that go out and build trust of investors, tell the truth. If there's an issue, share it in advance rather than package it. And that is extremely important. And one of the things which worries me about financial services is excessive short-termism in leadership at most institutions.
But isn't that the bane of a listed company CEO, that every quarter, you have to handle investors? I mean, how do you balance, those aspirations?
I think in the case of banking, it's a little more complicated. Yes, of course, it's also clearly about listed companies, but it's also about the fact that the whole-time directors have tenures of 3 years, and then they're to be renewed and approved by the board and the regulators. So there is always a concern in the minds of the leadership. Am I going to get a next term? Am I going to get the full next term? Is it going to be part of the term? And rightly so, the regulator also has a point of view that because it's a highly leveraged industry, therefore I don't disagree with it, but it does bring in a mindset which is more short-term.
How do you think, policies and regulations will impact the banking industry? Because if you looked at the economic survey, you looked at the budget, there is this whole talk of deregulation which is in the air. And from a banking industry point of view, what are your thoughts?
I think banking industry needs a mix of entrepreneurship and regulation. And entrepreneurship does not mean giving away professionalism. I genuinely believe the most powerful phrase in banking, finance, and management is professional entrepreneurship. Any entrepreneur who cannot embrace professionalism will have trouble. And any professional who does not embrace entrepreneurship will find a limit to his or her growth. Therefore, a professional entrepreneur is the way for the future.
In terms of deregulation?
I think in terms of deregulation, I think we can do with some of it, with checks and balances and guardrails. And the way probably we need to do is how do we encourage innovation? One of the challenges is if you look at the financial services landscape, it is banking, it's capital markets, it's insurance, it's NBFCs, it's asset management, a whole range of financial intermediation processes. You have the process which is the borrower and saver, that is a saver-borrower process. You have a process which is investor and issuer. The way we are regulated today, we are compartmentalized. And the way the saver looks at it, the saver looks at it horizontally. You may be putting money in a deposit, but you're also a mutual fund investor, you're buying insurance. But the regulator is looking at his or her respective vertical. How do we get a holistic view of financial intermediation from the lens of a customer?
So do you think there is a need for a super regulator, maybe like the Monetary Authority of Singapore?
No, I think we already have a mechanism that can sort of be made better, and that's what the finance minister alluded to, which is the Financial Sector Development Council. That should be made more cohesive, powerful, and really focusing on how do we look at the financial sector across the curve. So we already have a mechanism of FSDC. How do you give teeth to it?
How do you see your role evolving as a non-executive director at Kotak Mahindra Bank, and what is the guidance that you will offer to the new leadership team?
So as I mentioned, my view on my role is pretty clear. I'm very focused on governance and strategy. And I'm extremely focused on ensuring that at every stage, the bank and the financial institution continues to build trust of investors, savers, stakeholders. That, I think, is a role for me. And the fact of the matter is, one is I'm on the board. Second is we continue to be 26% shareholders. And third is we see our name on the board, and that matters the most to us.
Right. Mr. Kotak, roughly 3 months ago, when the Mint team last had a chat with you, that time you had mentioned that, you were pretty confident about India's prospects, and the only thing you were kind of concerned about was a global scenario on the external front. Now, looking at the events that have transpired, in the last 90 days or so, has your view changed?
I think we have seen the change happen in the US in the interim, and we have seen the US play out over the last 2 months, and we're going to see some big announcements on April 2. The thing which I think, first of all, India continues, I think India seems to be able to navigate the change, and I hope reasonably. We have a trade surplus with the US, which is $46 billion trade surplus. We should be able to navigate something. Even if we lose some of it, we will substitute it with some other country and maybe some net trade loss, which may happen in this trade war. Second, I think on investment flows. However, if I was sitting in the US and thinking about it from a US point of view, the US should be very worried about the unintended consequences of its actions. And if you take an aggressive position with the rest of the world, which US has, and probably it will be more acquisitive, including on geography, you also have to be clear, back to the first principle, the country which is the most trusted for your savings across the world is the United States of America. Every sovereign nation in the world puts their surplus significantly in US treasuries. What happens if there is a little wrinkle in that confidence? What happens if some of the monies of the sovereigns move away from the United States to a Eurozone or gold or something else? What is the implication for the United States, including the funding of its treasury? What I call as the rule of unintended consequence. So that is one thing I would certainly watch closely. The second thing is, which is coming out very strongly, is each country to itself. And Europe is realizing it. They've got to spend a lot of more money on defense. I think India has to recognize it. And on defense, there are two issues. One is, of course, you have to increase the spend as a percentage of GDP. Therefore, India will have to spend a lot more. The second is, if you're buying it from a third country rather than making it yourself, that third country may be your ally today, but may not be an ally tomorrow. They may switch sides. How are you safe on your defense in an electronic digital world with a third country where the relationship is becoming a lot more transactional? Therefore, true Atmanirbharta has to be for India to spend more on defense and build it in India. And I would love to see a lot more. That is getting pretty clear. I think we are moving into a world which is significantly more transactional.
Do you think there are also opportunities for India in such a world?
The biggest opportunities and risks are at turning points in history. I think we are getting to one such turning point. But it's both ways. Many businesses which don't exist may become huge. Many stable businesses may get shaken as well. And on one of these discontinuities, we are all seeing the discontinuity of AI. Okay? And I think that is going to play out over the next 3 to 5 years pretty dramatically. And what does it do? We don't even understand all the consequences today. But it's going to change the way we live. And what are the things which will change? What are the things which may not change? And people who can be a good judge of that can really flourish in the future.
So if you want to bet on businesses which will make it big at this turning point, what would those be?
I think businesses which, first, I believe businesses which continue to have the human aspect. Therefore, I think things like music. Things like, you may say that, okay, music can be made on AI, but people will still want to watch a music performance in person. Or actual sport of human beings participating. Like chess has proved that the machine is better than man or humans. But people still like to see human chess. So there is some areas which will be protected. But there are lots of areas which will be wiped out.
Such as?
So, say, for example, why do you need bookkeeping? Design. I mean, there are so many design studios. You can make a full movie through AI. So how that will play out. On the other hand, think about a big movie star. You can change and make him look young. Therefore, the life of a movie star may actually go up. His screen life may go up. So things will dramatically change and people may accept a Shah Rukh Khan at 30. Therefore, if somebody bought lifetime rights to a movie star and does a significant amount of playing around with that, it may be something which the audience may accept. I'm not saying the audience will or not, but I'm just throwing ideas of what can happen. Suddenly he looks younger. Like the whole area of health, these anti-obesity medication is dramatically changing life, behavior. How are you going to look? How are you going to be? What will it change our approach? So lots of changes happening. You've got to be laser focused on where the opportunity is and make the change. I also believe one thing will happen, which is a very big risk. And that risk, which I believe is, I think we are moving to a world where more and more the chances of moving towards universal basic income is a very strong possibility. Every citizen will expect a minimum right to live. And the state will have to ensure that at some point of time. And you can already see that happen in front of our lives. The challenges which you face, or the political parties face at election time, promising something after they come back, before and after. These are all signs that you need to ensure minimum level for each person. I think it will become a part of the fisc. But if it does become a part of the fisc, how do you fund it? How do you finance it? How do you ensure your priorities? How do you tax? How do you collect your revenues? At a time when also you're going to spend a lot more on defense. So the whole game is changing. I think we are at a turning point of history. Okay? And this is the time, this is a time almost like post-World War II we are coming to.
But can a country at this stage of development, like India is, and given all the other problems we have, even if you were to have something like universal basic income, I mean, how far away do you think it is?
I think India can't afford it today fiscally. But you will find no choice. You know, each of the economists keep on complaining, oh, you're giving too many doles, you're becoming very populist. But a politician has to win elections. Therefore, if we want democracy to sustain, directly or indirectly, this will happen.
shifting tack slightly now, you had earlier, lamented the fact that there is a lack of Indian global brands. What do you think is holding back Indian companies?
I think you had a speaker before me who could have given you answer better to that. But I would love to see parachute coconut oil thriving in the United States of America. I would love to see a Saffola be the brand in Europe. But we are some way away. Therefore, if you ask yourself a very honest question, where are we on? Give me one global Indian consumer brand that you go to any corner of the world, from Boston to Paris to Bolivia to China to Sydney, where the global consumer recognizes an Indian consumer brand for what it is. Frankly, I have struggled to find one. There are small pockets where progress has been made, but a global Indian consumer brand, and the comparisons I'll give: Apple, Meta, Google, Coke, Pepsi, P&G brands, Lever brands, a Chanel in Europe, BMW, Audi cars, Italian brands, Samsung, LG, Hyundai, Sony, Panasonic, Toyota, BYD, Lenovo, TikTok. India? I wish. But we have to ask that very important question.
But what is actually holding them back?
I think we've got a very protected country. And people are very comfortable in the comfort of our 1.4 billion people. Home market is there, protectionism there. Why should I really try to become a global brand? I'm making enough money.
So now, with globalization in retreat, don't you think this trend will be accentuated, as in people will not care so much about competition? In many industries, we are moving towards an duopoly kind of a structure.
But you will still keep in mind, for a firm to be truly world-class, you'll have to get there. The global consumer is your test of quality, your excellence. And it's not about price. If you have a strong brand, you can actually command a much higher price. But it means intense competitive ability. And I see reports of BYD coming into India, and you guys in media seem to be more worried about Indian auto companies than they are.
Okay, we will open the floor for audience questions. Yes, please, the gentleman in the front.
Hi, Shekhar from FedBank. Good evening once again. My question is split in two parts. One, since you talked about the advent of AI, right? I've also written an article before. Now, you have been a veteran banker, you've been a promoter, entrepreneur, everything. Now, one is, how do you see AI impacting banking, whether it's credit underwriting or whether it's wholesale banking, just more customized, or retail, collections, what have you? And second is, that given that AI is going to be here, right, it's not going to go away anytime sooner, it's going to get more and more, whatever, productive and everything disruptive. Given this disruption, would you still advise a budding entrepreneur today, he or she, if they want to, let's say, start a NBFC or a banking, given all this turmoil?
You know, AI so far has done a lot of the feel-good kind of things which can change, okay? I think the way AI will evolve is it'll start completely changing we should work towards making AI change some of the very mundane stuff. And I don't think enough has been done on that so far, where you basically say that these things just come out from the machine, okay? How do we make AI from good to be to have to be? And the more we do it in every sector of our business, it will work. And in the short run, it is dramatically going to increase the need for engineers to be building AI. But that requirement will go away. So it's like a surge, and then it will sort of move down. But to get to a level where you are able to implement AI in your system, you need to be at such a level of technology that it's pretty easy to move AI into your core system. So you really need to up your technology spend in the short run, and then AI enabled, which will lead to dramatic efficiency gains, and of course, done by fewer number of people. The bigger question is, for a country like India, what are we going to do with the people? And how are we going to handle that as one of the big challenges?
So still a good time for the budding entrepreneur, for anybody to get into the banking business or NBFC lending, even today?
I think we need to have a discussion on that. I think NBFCs, and this is my honest view, I have lived through an era of NBFCs. When we started after 85, by 94, 95, there was a huge proliferation of NBFCs. By 97, 98, there was 4,000 NBFCs in the system. And by 2004, we were down to 20. So I will not hazard a guess, because I don't want to be unfair to any NBFC. Make sure you have a business model, you have a reason to exist. And today, one of the challenges for NBFCs is your cost of funds is low only if you are AAA. Moment you are AA or lower, your cost of funds disadvantage is significant. Therefore, how are you going to climb up to a higher rating basis to be competitive as an NBFC?
And regulatory arbitrage is vanishing for NBFCs.
Yeah.
Thank you.
Yes. Neil.
Sean Fernandez. And so as everyone knows, your journey has been phenomenal, nothing short of spectacular. So what I'd like to understand is that...
Where are you?
So, sir.
Hi.
Yeah, yes, sir. As I was saying, your journey has been nothing short of spectacular. And in a country like India, where especially recovery continues to be a challenge, and going, about your bread and butter business, did you have any overarching philosophy in lending and recovery that, helped you to navigate through this, where so many others have stumbled, if not totally failed? So how did you navigate through this very challenging process of lending and recovering?
I think two very simple common sense principles. That in a finance business or a banking business, say you start with 100 rupees of your capital. You start with 100 rupees of your capital. And you borrow 900 rupees. So you have a total amount of 1,000 rupees. I'm not getting into complexities like CRR, SLR and all that. I'm keeping it out. Therefore, you've got 100 rupees of your equity. You've raised 900 rupees of deposits or borrowing, so you got 1,000 rupees. For the moment, you have lent out 1,000 rupees. If you lose more than 50 rupees out of 1,000 rupees, more than 50 rupees out of 1,000 rupees, you're out of business. Because you will not have the capital to continue being in the business. So principle number one, you don't own 1,000 rupees. You own 100 rupees. But you're taking responsibility for 1,000 rupees. And if you lose 50 out of 1,000, you're out of business. And the paranoia has worked for us so far. And I believe every entrepreneur in a leverage business must keep in mind that the room for error is extremely small. So that's principle number one. Principle number two, whenever we had to get into any area of lending, the first principle you ask is, can you collect? If you cannot collect, don't lend. So as long as you follow this, and you don't worry about your neighbor's growth being better than you, you're okay.
Neil,
So this is Neil Borati. I'm the personal finance editor at Mint. What is your view on the huge commissions in life insurance and the mis-selling of life insurance that goes on in banks? How can this be fixed?
I think on insurance, I think the key issue is that there is a very strange behavior in India. I don't know whether it's customer oriented or the insurance oriented or over ages because of the tax benefits. 30% of the insurance business happens in the month of March. Okay? And this is historic. Maybe LIC ke zamane mein you used to get the tax benefit, means everybody did insurance in March. And then for all the system, huge pressure comes to achieve their targets in March because of the nature. Therefore, one of the things which which I keep on telling people is, how do you change the seasonality of insurance so that it becomes a more mature, round-the-year business, rather than first 3 months of the year is aram. People don't do anything. Then they wake up. Then they have coffee. Then they have breakfast. And then they realize that they've got to get their business in the last quarter. So most insurance companies, if you look at sales, it's 10, 20, 30, 40. Or actually 10, 20, 25, 45. I think this level of seasonality just brings huge pressure on the industry. And I would strongly advocate the Life Insurance Council to think about how you get this seasonality away, especially now that the tax benefits are gone away. Okay, and you move to the new tax regime. Therefore, the old seasonality of the LIC days moves to a more mature insurance industry month after month.
So do you believe that commissions should be equalized between insurance and other investment products, especially the kind of life insurance policies that have investment?
Finally, what you have to be clear is, I think you have to benchmark against the rest of the world. The fact of the matter is, in an asset management product, you think your commission is low because it is, say, 0.5, 0.7 or 1%. But it's a short-term product. An insurance product is a 15-year product. So there's an element of front-ending for the 15-year period. One possibility, it could be amortized over time. That is a possibility. But compared to other financial products, what I understand from the insurance industry, that it is a much more push product than others. So you've got to find an appropriate equilibrium on this. Therefore, there is a case for looking at, one, the life of the insurance product versus an asset management product. So therefore, a higher commission compared to just a 6 months or a 1 year product. But should we be giving some sort of spreading over, say, first, second, third, fourth year, something like that. But I think insurance industry is doing something on that after some new surrender value guidelines, which the IRD has brought in October, which actually gets to distribution industry having to claw back in case there is a policy which gets lapsed after 1 year and things like that. So there is some checks and balances which the IRD has got recently.
One final question.
So one final question. So this is Sumit Doshi here, over here. So great insights. So your view on GIFT City and its impact on financial industry and banking in particular?
I'm a great believer that India needs a strong offshore financial center. But of offshore financial center, we have to be clear about what our purpose is. What are we trying to build? Are we trying to make a Hong Kong? Are we trying to make a Dubai? Or are we trying to have an adjunct with all the regulations and laws of India? The best example I have by far is Hong Kong. One of the smartest things the Chinese did was to give Hong Kong to the British for 100 years and ran it like an independent country. And 100 years later, they said, okay, this is ours. And Hong Kong became a huge adjunct for China. Now, what it means, if you want to build a Hong Kong-like offshore center, it means its own jurisdiction, its own laws, its own regulation, its own taxation, like a foreign country within the country. Now, to what extent is our democracy ready for something like that? Or are we always going to have a situation where, no, we can't make it so independent? And I think it's a fundamental issue about the structure of a country.
So you're saying it is not just about financial regulation, but political independence?
No. Let's clear, after 97, politically the Chinese control Hong Kong. I'm not saying political independence at all. But how independent, like if you go back to 1997, China made a statement, one country, two systems. That was the wording of China in 1997 when they took over Hong Kong back. So they own Hong Kong.
Fair enough. One final question from that lady, then we are closing. Time's up.
Thank you. Good evening, sir. My name is Lalita. What I want to understand from you is any advice that you want to give to Generation Alpha, Generation Beta, and one word of caution that you think stays for all of us.
I just feel you're lucky. You're very lucky that you have the opportunity. You have the confidence as a country, as an Indian, much more than our generation had when we were growing up. Just keep in mind that whenever you go boldly and constructively forward, always ask a question, what if? And ask inconvenient questions to yourself, that if I took this step, what if this happened? So at least you have answered to yourself. Most likely things will go right for you, but you should be ready for consequences. And there are three kinds of unknowns. Okay, one is, let me make it simple. Known knowns, known unknowns, unknown knowns, unknown unknowns. So ask yourself you will never know unknown unknowns. Okay? So ask yourself, what is your scenario as you think about the future? And somebody gave me a wonderful comparison recently. The difference between risk and uncertainty. Risk is you can evaluate risk. Uncertainty gets into the era of unknown unknowns. So that is the area which is something you must constantly dream. And I believe risk is one of the most powerful dreaming areas for each of us to keep in mind. Just as you dream for good things, when you're taking a big step in your life, dream about what ifs and factor it into your decision making as you go forward. And that will work for you, okay? So be bold, take big strides, but ask the tough questions to yourself.
On that positive note, we are closing the session. Ladies and gentlemen, Mr. Uday Kotak.